And it would appear that the world is at war. That's what everyone's saying. What exactly are these currency wars that we're hearing about? Are they in fact happening? And what effect are they going to have on you and me and our little rand? Brigid Taylor is a currency specialist at RMB, and we've dragged her into the studio. Nice to have you with us. I am very proud to be able to give you the second of our 5-cent commemorative coins.
Oh my word, okay.
You're the first lady on the show.
Thank you.
The first commemorative 5-cent coin went to Kevin Lings.
Oh, okay.
Because he was the first guest. Actually, you know what? Kevin behaved so much like a woman, we should have probably given him 10 cents right up front and just got it over with. Welcome to the show.
Thanks.
Nice to have you with us. A while back, I remember talking to you about rand strength or dollar weakness or where the rand was going. And you said to me at that stage, if you can get a rand for under 8 to the dollar, it's a bargain. You're still of the same opinion?
Well, at the moment, I mean, you certainly are in a different scenario totally. I mean, I think that movie's changed quite significantly. I mean, the last time we chatted, that must have been, geez, over a year ago, Jeremy.
Yeah.
So, you know, I think that the markets have certainly changed. I think a lot of South Africans had the picture in their mind that there's no way that rand can be so strong. You know, how are we going to deal with this? It's taken people a long, long time, in fact, the better part of this year, to get their heads around the fact that the rand is going to remain strong. And that's unfortunately the scenario that we're faced with. In my mind, it's actually a better scenario, but obviously depends on who you're talking to.
Why do you say that, Brigid?
Well, I think that it bodes well for the kind of sentiment that's attached to South Africa. I think that as South Africans, we can certainly be very proud of the fact that we've done well. We've had a great World Cup. We've presented ourselves well. We've managed monetary policy. We've sent out the right kind of signals. And what we're seeing now is investors really being interested in our country. And that's the reason that our rand is so strong. Predominantly because we're an emerging market. We're also a well-managed emerging market. And because of that, people really like South Africa. So, you know, if you look at it in terms of a global perspective, we're not Greece, we're not Portugal, we're not Ireland. We talked of in a very, very positive light. And from that perspective, I think well, we can pat ourselves on the back.
But now, you're saying that, but there are all sorts of different calls coming in from 9 rand to, we spoke to George Glinos a few weeks back, and he was saying down to 5 rand 50.
So I'm much more in George's camp.
Are you?
Yeah. I think, you know, I was in London last week talking to the investors offshore, talking to the banks. A lot of these guys are looking to put money. There's a lot of cash in the system. Money that's basically been borrowed at 0%. In the United States, rates are almost at 0, which ultimately means that there is this huge wall of cash that's looking for a home. And one of those places will be South Africa, just because we've got an attractive, it's like an investor going, where do I put my money that I get the best return for that money? And ultimately, at the moment, it's a safe investments, relatively speaking, in South Africa, and you're getting a good return.
But it's also a very dangerous place to be, isn't it? Because that money is flowing in now. I think we said a while back on this show, all it takes is one really stupid politician, and my holy camoli, aren't there plenty of those around, and that money can all flow straight out.
Absolutely, and that's always going to be the risk. I think what we're starting to see, which has been quite an interesting scenario, is in the past, we call it fast money, money that's like hedge fund managed, where it comes in and out, it's quick and easy, and it's looking for a quick home. But you've got the real monies, which are the asset managers, and those guys are even starting to invest in South Africa, and that's longer term money. That's money that's looking for a home for the next year or two. And we are actually seeing a good portion of our funds that are coming into South Africa being that type of flow. So that's positive, and that's why you've seen the rand behave the way that it has. It hasn't had these huge spikes that we saw in the past. I mean, if you remember a good few years back, you didn't even flinch, and you'd see 20, 30 cents in the rand in a day. You're very unlikely to see that currently because of the way that the money is moving in and out of our currency. It's moving in a much more measured pace, and our currency's also got quite a lot of depth, so there's a lot of participants in the currency.
Okay, but there are also a lot of people in South Africa who are squealing very loudly because of the rand strength. We're such a small player in the world game. Can we do anything about it?
No.
I mean, others have tried.
Exactly.
Brazil's
well, that's
tried.
The point.
Switzerland's tried.
Exactly. And to their detriment. I mean, if you look at the amount of money, Japan's a good example. They recently intervened quite aggressively. They hadn't done so for over 13 years or something silly. Spent an absolute fortune, and yet we're at sub-intervention levels. We're back to below the levels that they got involved and tried to support their currency. Unless this is a unified global decision that's taken, it's unlikely we're going to see that. And at the moment, the US are keeping their currency weak, obviously to benefit themselves. So they're printing themselves out of this dilemma. They're trying to export themselves out of it, weakening their currency. Not everybody can have a weak currency. Unfortunately, we're in a scenario where the rest of the globe is obviously on the back foot. China's of a different sentiment because they're pegged to the US, so they get the benefit of the US dollar being weak as well as the fact that they're exporters. But I think from a South African perspective, what we need to start questioning is how do we buy goods and how do we upgrade our inadequate infrastructure at these lower exchange rates? How do we maximize the opportunity that's being presented to us rather than moaning about it? You know, how do we position ourselves now that the world is changing and people are looking to Africa and certainly viewing South Africa in a much more positive light? How do we therefore kind of position ourselves to really take ourselves to the next level and really become a significant global player?
But you see, there is no sort of, what we call it, a coordinated policy, because we're living in a very financially divided world. You've got China blaming the US and vice versa. You've got Germany saying that they're in a great place. Then you've got the rest of Europe is in a mess. There's no cohesion here. So are we ever going to get a global policy which will see this pandemonium start evening out?
I think that what you'll eventually find is that economies will start to stabilize. The big problem at the moment was there's a lot of concern that the developed nations, being the likes of the US and the Eurozone and the UK, were going to go into a double dip. So they were going to go back into recession. And that was really, really where the big concern came from.
You're saying it in the past tense, so you obviously don't believe that that's going to happen.
No, it seems to have changed quite significantly. So, you know, then you had the big talk about how do they prevent that from happening. And the world was very concerned because obviously this is the engine of what's happening globally in terms of us even. I mean, you could see the huge demand that's dropped off in terms of the fact that the Eurozone has taken so much strain. South Africa's been impacted by that directly, although we are so far removed from them, they're one of our trading partners. And this is how the world works, is we all trade with one another, whether it's China with Asia, whether it's the US with Europe, it doesn't matter, we all trade with one another. And I think where the big risk lies right now, and that's what we'll start to see next week, there's a G20 meeting where these nations that you're talking about, everyone's going to get together, talk about this currency debacle. And one of the things they will definitely bring up is the fact that there's potential for people to start imposing tax embargoes, you know, trade embargoes, and that could potentially be much more destructive. So at the moment, yes, it's a currency issue. Yes, the globe is certainly not, you know, totally out of the pandemonium. But if you see the data that's starting to come through, we're starting to see growth. We're starting to see sustainable growth. And hopefully that momentum continues. It's not going to be that growth curve we all hoped for at the beginning of this recession. We expected ourselves just to pop out of it. It's not going to be that scenario. I think that the damage has been a lot deeper than what we all anticipated.
What's your usual day like?
What's my usual day?
Yeah, I mean, what do you do?
I get up and I feed my children, and then I go off to work and work madly, and yeah,
but I enjoy it. What do you, I mean, people see you on shows like this and on Business Tonight. What does a currency specialist do? Do you just go into this office and sit down and start trolling through data and trying to see what's happening?
I speak to a lot of people, Jeremy. I've got a lot of offshore guys that I talk to. So all the guys that are based in Scandinavia, Europe, most of them are within our time zone because of, you know, you've got the UK, the Eurozone, and then obviously the Scandinavians. We pick up some of the Asians as they're closing up shop and the Australians, and then we talk to the US in the afternoon. So you're getting a good mix of what's happened. So we pick up what happened overnight. We talk to the Asian market in the morning. When we come in, they tell us what happened during their trading time, made some decisions around that, talk to the guys on the ground who are actually trading the currencies. What are their views? How do they feel about the market? And a lot of it is driven by sentiment. What are people feeling? What are they thinking? You know, because people will position themselves or take views based on how they ultimately feel about an outcome. And as you said earlier, I mean, that's quite significant in terms of the fact that people say things that they don't realize have such a massive impact in terms of guys that maybe don't understand the politics of South Africa, or don't understand how our unions work, or don't understand that there is this huge divide in terms of wealth and people not having wealth. You know, those kind of factors unfortunately have negative bearings. So you're trying to, you know, increase that knowledge all the time with our investors.
What do you do with all that knowledge then?
Well, you pass it on and you just talk to people. So we talk to people all the time, just trying to find out.
Is that why you never shut up?
Correct.
Because you just talk to people
all
the
time. Blah, 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 blah.
That's all you do.
Exactly.
Question in from Peter Wakefield in Plettenberg Bay. As a learned Rhodes Scholar, I hope you can advise another extra. Peter, I was never learned, I can tell you that much. I spent about as much time at the Victoria Hotel as I did at university. I have offshore investments. The current property market in South Africa is in a slump, with many properties being repossessed and auctioned at very low prices. This seems like potentially good investment opportunity for the future. However, the rand is so strong and overvalued. Would you recommend bringing offshore funds back into South Africa, making a loss on the exchange rate and investing in property while the prices are low? Now, I know you're not a property specialist, but is there a case here to bring back money and even lose on the exchange rate? Because you could have taken out, I don't know what his offshore investments are in, let's say it's in pounds, he could have taken them out at 11.50.
Sure. But you know his other side of his coin, he's got a double whammy, because he's not only lost out on the exchange rate, he's also lost out on interest rates.
Yeah.
He's sitting with his money in the US or the UK or wherever, earning
0.000.
where he could have been earning 8% in South Africa and managed to protect his exchange rate exposure. That's always the risk that you take by taking your money offshore. Unfortunately, you now become a currency person, that you've got to manage your currency exposure.
Are you finding people starting to bring money back and invest it in
using in South Africa? Absolutely. I think what you're starting to see, I mean, we saw it recently talking about the exchange controls being relaxed and people being able to take out 4 million rand a year instead of just a capped 4 million rand. You're unlikely to see that being fully utilised anytime soon.
Shoot, in fact, damn right, you're unlikely.
Yeah.
How many people have got 4 million rand?
But even if they did, Jeremy, you have to ask yourself, would they really want to take it offshore? Why would you do that? What's the upside for you? I mean, the property market, do you think the property market has opportunity here? Absolutely, because we are in an environment that's potentially going to still grow quite significantly. Whereas you put it into the UK, or even worse, into the Eurozone, where they've still got to imply all that austerity. So they're going to put a lot of clamps on the communities, taxations, etc. That is unlikely to be a scenario that's going to grow anytime soon. So definitely, I would say, South Africa, and maybe look at other Asian, entities, because Asia's growing quite significantly. But I'm still a firm believer that South Africa is the place you want to keep your money right now.
Okay, I want to come back to that 4 million rand, because I want to ask you, if you were going to take it offshore, what currency you would take it off in, and where you would put it. I'll come back to that in just a moment. We've got to go to a break right now. Also, a good question in from Johan on email as well. Don't all countries want a weak exchange rate? We'll come back to that with Brigid Taylor.